Hello, this is the TradeSight U.S. Stocks and Futures Market Preview and Domestic Economic Data Roadmap for the week beginning Monday, the 22nd of June, 2015, ending Friday, the 26th. Hope you had a good trading week as we wrapped up triple expiration on Friday here for the markets. Charts, as usual, brought to you by eSignal. If you have not taken a trial of our services, you can feel free to do so. We will help you out for a couple weeks. Here's a look at the ES front month futures contract. We reached down this week yet again to that cosmic 2062.50 level. Bounced right off of it, basically to the tick. Came back up. Thursday was a gap and go session, held up, and then Friday, of course, for expiration, nothing. And I'd like to tell you there's some great new technical something or other that we're going to discuss here, but the reality is we're still exactly where we were back around Thanksgiving. Been sitting here for 6, 7, 8 months now. The range is horrible. The daily ranges are maintaining, but we're not going consistently enough in one direction or the other to get great pattern setups and breakouts in the market, and so things are largely uneventful, I would say. We had some opportunities this week, but of course nothing's stellar. Volume continues to be light. Here's a look at it. Basically started the week, most of the days this week were around 1.6 billion shares on the NASDAQ. That's mid-range for the year. Nothing exciting, certainly nothing above that 1.8 that we like to see. Only had a couple surges of that this year, January, a couple days in February, scatter days in March, a cluster of days at the end of April and the beginning of May, and that's really been it. Obviously, Friday for expiration, 2.18 billion shares on volume, but that's just because of the expiration volume. That's not real trading. Anyways, you can see go back 3 months every time. There's always a better day, and frankly, 2.1 is very low for that. If you look at the one back in December, it was almost 2.8. Even in March was 2.4. So 2.18 billion shares on a triple expiration is not very interesting. All right, so let's look at some of the cash indices here. S&P actually lost 11 for the session after being higher on Thursday. NDX lost 18 after coming near new highs, believe it or not, but of course can't just break out and run. SOX was down 2, which is minimal for that index. Biotechs was up 2. That's at new highs, but new closing highs on the biotechs. Google gained 1.34 points on Friday after a big day on Thursday. Apple down $1.20. Apple does not look great here if it breaks that red static trend line. VIX closed up 77 cents at 13.96, which is definitely mid-range for the year so far. Crude oil down a bit, under $60 again at 59.61 for the close. Gold lost 2, 1,200 even. And here's a look at the trend, which another big close for the trend, 1.8. Had 3 big days for the trend this week, which keeps that moving average pretty high. 1.12 was the 10-day moving average on the trend. All right, so let's take a look at the interweek action. We're going to switch this to 10-minute candles so that you can see all 5 days of the week in this time frame. You can see Monday we gapped down, made our way partway back, and then flatlined for the session. Tuesday, flat opening, came back up the rest of the way. So it took all of Monday and Tuesday just to recover the gap down from Monday. Small gap up Wednesday that we filled ahead of lunch, wiggled around a bit. That was the 2-day Fed meeting, the Fed announcement as that moved the spike you see Wednesday afternoon. And looked briefly like we might start running and then rolled over and closed at the VWAP anyways. Thursday gap and go session heading up. High of the week was over lunch on Thursday. Came back to the VWAP and then closed just above that on Thursday. Friday gapped down, did not fill the gap. Look how flat those first 2 hours were. Basically a 4-point range on the ES for the first 2 hours. We were still sitting on the VWAP mid-lunch, and then we did sell off a little bit late in the day as they wrapped up the week. A lot of people were already gone, I'm sure. And we did not fill the gap. So we have the gap above from Friday's gap and the gap below from Thursday's gap. Take a quick look at the NASDAQ side. Not much different. Gap down Monday. Took all the way until Tuesday to fill it. We were dead flat from last Friday's close at the end of Tuesday. Everything's the same as what you saw on the ES. Only difference is that we did not leave a gap Friday on the NQs, but we did on the ES. All right. So what do we have to look forward to for the week? Well, let's take a look at this. First of all, options expiration is behind us. Sometimes, Mondays aren't always the best day. It takes a little bit to get going again with the new options cycle, but I would think there's maybe a possibility Monday would be all right. Tuesday, Wednesday, Thursday should be the better trading days of the week, and then Friday, of course, slows down. Let's take a look at the data. Monday, existing home sales 30 minutes into the market. Tuesday, durable orders an hour before the market. Housing price index 30 minutes before the market. And new home sales 30 minutes into the market. Wednesday, MBA mortgage index at 7 a.m. Eastern time. Who gets up that early? GDP. That's the third look at the first quarter GDP, so there's not going to be any surprises there. Crude oil inventories an hour into the market. That's the weekly number. Also a weekly number Thursday morning, an hour before the bell, the weekly initial and continuing jobless claims data. Not a lot of surprises there. Personal income and spending, and the PCE prices core index. And then an hour into the market, the weekly natty gas inventories number. Friday, the only number is 30 minutes in, the final look at Michigan sentiment for the month of June. So nothing here major this week. Hopefully that means we can still have something going on even without any significant economic data due. A couple things to focus on, though. This is a straightforward, clean trading week. None of our biggest economic numbers, no Fed meeting, no options expiration. We're not in earnings season yet. That starts later in middle of July, mid to late July. Next week, though, the week after this one coming up, is a little bit different because it is the end of the month, end of the quarter, end of the halfway point of the year on Tuesday, June 30th. That usually means markets are slow, usually the day or two before that, Monday and Tuesday. You might get some movement, but usually they're pegged to where they want the stocks to print for the end of quarter, specifically end of quarter statements. And then a lot of times July starts and we start moving right away. So we'll see. But the one trick to that, of course, is that with Monday and Tuesday being the end of June, Wednesday, start the month out, you might think, all right, boom, sometimes we take off. But this year, the way that July is shaping up, you've got Wednesday, you've got Thursday, and then Friday the markets are closed because Saturday is 4th of July and it's observed on Friday. So that only gives them 2 days, and everybody will leave early Thursday heading out for the long weekend. So are they going to take off running July 1st, or do they wait till they come back from the holiday? That's the question. But I think come July, we can get free of some of this stuff, hopefully. It's always an opportune time. The markets do tend to move around then, and we just love to get out of this range and get back to work, get some volume back in the market, and really be able to do what we like to do here at TradeSight. Everybody have a great weekend and a great week. Hope to see you in the lab. If you do find these videos useful, please like them on YouTube. It does help us out. Have a great weekend.